Hi everyone, hope you're doing well. Today we're going to talk about a brand new UK stock I have started buying. So you might remember last week I talked about buying WH Smith's, a new stock into the portfolio. And I also bought another UK stock, this time a bit more of a risky stock, a bit more of a spec stock. And I'll talk about that one today in a few minutes time. So we'll get on to that. First of all, just want to say thank you for you guys that joined the Patreon yesterday. A few of you guys joined through that yearly membership, which was great to see. And thank you for supporting the YouTube channel as always. If it wasn't for you guys, we wouldn't be able to do the YouTube videos 5-6 days a week. So yeah, thank you to you guys that have done that. And a shout out to JD Sports. I mean, the rally just continues. Another cracking day today, up another 3% in the last 5 days, up 7% in the last month, up 10%. Yeah, it's been on a really good rally. That bounce up out now really from those lows in April and also those lows that were hit in June time. Yeah, it's been a very good rally. So any of you guys that were buying in that dip in that the 52-week low was 61p, and even 70p was a good buy, 80p was a good buy. So well done to any of you guys that was buying that JD Sports dip. You are getting the results and the rewards just like me, which is great. Same again, no patio update for you guys. I apologise. We're being rained off again. Hopefully tomorrow is the day I give you guys the patio update and we'll get there. So first of all, the new stock. What is the new stock? So I used to own it, made good money on it. Since then, the company has had a very tough time in the 3 years since I used to own it. Yeah, that's one way to put it. And I would put it in the category now of a spec stock, a speculative stock. So what does that mean? So this sums it up quite well here. It's defined on making assumptions rather than facts and data. It is a high risk to high reward as well. So yeah, this is it. Like, you guys know me. Normally I come to you guys, I'll say that this company has, you know, great growth, great profit growth, great balance sheet, good valuation. With these things, it doesn't apply. It's had bad growth. It's loss making. It's got a terrible balance sheet. So all those things I would normally say to you guys, it has. Today it doesn't have it. It does not have those things. So this is solely based on some things that have happened recently, and they are yet to be proven if they are going to work out, and that's what makes it a speculative stock. There's no proven factual information that this is going to work out compared to where I normally tell you guys, look at the growth, look at the profit, look at the valuation, look at the balance sheet. Insider buying, it doesn't have those things. So it is I would say that this is more of a higher end gamble ultimately. So always be aware of that. That is what a spec stock is. And you might be saying, well, why do this risk? Why take this risk? And 100%, you know, this is why when it's a spec stock, it's a smaller position, very, very small position, an allocation that I am willing that, you know, at the end of the day, this could actually end up going to zero. I could lose all my money. And because of that, it's a lower investment amount that I'm putting in. But why do you take the risk? Well, high risk to high reward. There is big high risk that this goes wrong, but if it goes right, there's high reward here. If this does execute, this is where you could see the potential in a year, 2 years time. This stock 5x's, 10x's, and just be aware, not always people just hear that and go, the ears pick up like, whoa, amazing. But obviously there is the risk there, and that's why there is that element of risk with this stock. And so we're going to go through it today. So the stock is Revolution Beauty. I did used to own it, made about 100% return on it previously, and since then it's been a really tough time for it. If you look at the stock price here, you can see here the stock IPO'd around about £1.69, and right now today it's at 3p. So yeah, a massive fall off here, down 97%, and year to date down 79% year to date. So it's had a very tough time at the moment. So in case you don't know what Revolution Beauty is, they do a lot of makeup products, whether you do that through their online store or if you hop into someone like Boots, for example, you probably see their products in Boots as well. Like I said, financially absolutely awful. You can see here really since 2022 the financials, let's go on past performance actually. So if you look at the past performance, you can see here they're actually doing quite well, growing really until that 2022 timeframe, and then there's just been a massive tail off with revenue declining, losses as well really since 2022, significant losses here, loss making business as you can see here. Financial health wise, ugly balance sheet as well. You can see here they've got 31 million in debt, and in cash they've currently got 5 million in cash. So yeah, 31 million debt on 11 million market cap. Absolutely awful. Now, where did it all go wrong really for Revolution Beauty? Because you can see here 2022 was like the sticking point where it kind of started going downhill. Well, What happened in 2022, in September 2022, when the auditors refused to sign off their accounts due to serious concerns about financial records, particularly a questionable acquisition and sales practice. So that led to the suspension of company shares, and also the CEO resigned as well from the company. Since then, it was a founder company. Adam Minto was the founder of the company and had a good track record before that with the business. A very successful IPO, and then from 2022 when he left the business, it just went massively downhill. He did leave the business under some foggy circumstances. I think a few of them were that there was some concerns between stock and potential sales of stocks or actual products. A series of questionable sale practices. I can't remember the inside and outs because this was 3 years ago, but I believe it was something like purchasing stocks to meet financial targets personally. Obviously, something you're not allowed. I think there was also the suspicious loans to employees that wasn't allowed. So there's a few things that were like, oh, you shouldn't really be doing that, and obviously moved away from the business. Unfortunately, after Adam Minto did leave the business from 2022, after doing so well, the business then fell off under new leadership. New leadership came in, and maybe there was at the point of view where they were kind of like trying to steady the ship, but I think they didn't steady the ship. They actually made it a lot worse. They had Bob Holt come in, and he seemed to not continue any of the progress that Adam Minto had made previously when he was there. And then they also recently, as of this year, had Lauren Brindley in, and same again. What was built on a good foundation for Adam Minto wasn't carried on, and I don't know what they were doing, and they just left the brand clearly to rot, and clearly made no innovation in the products, no new deals with companies, and they just fell behind. And that goes back to the point is like, when I look at the previous management team, they were doing really well until that time where they had to walk away in 2022. This is the financial year 21's presentation. If I just scroll up to the top here, so you see here, half year results. So this was 24th of November 2021. And if we have a look here, revenue growth was growing at 39% year over year. Gross margins were at 47%, which are decent gross margins. 500 new launch products, new US stores launching. They just came off 2,800 new stores in the US. Adjusted EBITDA was growing 39% year over year, which is obviously great. That was at 5 million. So as you look at the market cap right now, that would be around about 2 times EBITDA of where they're currently at right now during that time frame. And they talked about, the accelerating of the new stores with Boots, for example, launching into 1,000 Superdrug and Boots as here. And also, they talked about launching their Man's products as well, which I don't know if any of you tried the Man's products, but honestly, to this day, I don't think, for £10, I don't think I've ever had a better spray deodorant than, or aftershave from a company like Revolution Beauties. Their Man aftershaves were absolutely brilliant as well. And overall, just look at all this. They talk about the new distribution in Target. They talk about the UK growth, the rest of the world growth here, the digital growth. It was all going up in the right direction. And I look at how this company was founder-led, doing some absolute cracking partnerships. Yes, obviously clearly they made a few mistakes in the business that they should not have been doing, and it did cost them. But this company was on fire in all cylinders. And I look at the management team that came in from that time frame, and I don't understand how within basically a year period, and then continued going forward after a year or 2 years, continued to destroy a company that was having a good thing going on. That absolutely bonkers to me. And overall, when you look at Revolution Beauty, the products are great. If you go ask your missus, I've asked mine personally, she loves it. Revolution Beauty is one of her favorite makeup products out there. I previously bought her other makeup products, and she says they're not as good as Revolution Beauty. They have a really good reputation. I've personally used them at the Revolution Beauty Man products. Like I said, for me, for the price and the product, one of the best aftershaves I had was from that Man. Probably the best for the price and the quality was from these guys. Really, really good products. I don't understand how this new management team afterwards that came in after all this disruption. Yeah, it's not the same as having a founder. managed to derail the company so much. You know, if you look at Trustpilot, you know, Revolution Beauty has 3.9 stars. You compare that someone to like Lush, I know they're kind of slightly different companies there, but you know, 2.9 stars. If you look at Elf Cosmetics, 2.6 stars. MAC Cosmetics, 2.3. Estee Lauder, they were at 1.7. Those are the ones that I could kind of find reviews for on Trustpilot. It was hard to get a few other ones. I tried to find War Paints, but I couldn't actually find War Paints reviews. As you can see, I put CW7 in here, and it's not coming up. Oh, there we go. It actually does come up. Ah, I don't know why I missed that. Oh, there's only 21 reviews. That's why I didn't put it up. But yeah, they've got 3.2 stars. Once again, you know, that's way below even Revolution's rating here. But same again, that's only 21 reviews, whereas Revolution Beauty is 25,000 reviews. So that's a great score considering how many reviews they've got. You know, you only normally leave reviews when you've got something negative to post. So yeah, overall, like, it was such a shame to see Revolution end up in this situation, because previously, you know, in 21, 22, yeah, the share price pulled back a little bit, but during that time frame, everything was pulling back, wasn't it? You know, you had the kind of 2022 stock market crash, you had that inflationary environment that was going on, and obviously they were coming off an IPO, and obviously, as we know, of IPOs, it's probably overpriced, as IPOs are always referred to. So there's always going to be a bit of a chilling phase on the share price during that period of time. But financially, as I showed you there, you know, the company was, you know, doing really well, the key partnerships, and then they had this disruption with the founders, the management team leaving. And like I said, the new management team came in, and I have no idea how they managed to car crash this company so much, because the foundations were there. And it's just been so mismanaged, and now it's being priced towards bankruptcy level, which is a shame, because like I said, they had the partnerships, they had the great products. Maybe they lacked innovation after the founders left. The reviews are there. I don't know how they've not been able to get more partnerships here. I don't know how they've not been able to drag up those profit margins even right now, which is absolutely ridiculous, because with those gross margins they used to have on 47%, that was basics to do, and they haven't been able to do it. And yeah, it seems like it was a bit of a shame. Now, what has happened to get me to go buy? Well, what has happened is there's been a board update from the company. This happened last week, as you can see here on the 26th of August. Well, actually, this was a later post. It was posted in the full year results, actually, which was last week. So they said here, the company is pleased to announce the return of Tom Aylesworth to the business as CEO to lead a revised and rebalanced business plan to set a clear path back to growth and long-term value creation. They also said that, and it's actually missing off this one here, but Adam Minto, the old CEO and founders, if you just go into the ownership plan, you'll be able to see here that they have a big stake in the business. So you see Boohoo have a 29% stake. Tom Aylesworth, the CEO that's come back, the founder that's come back, has a 15% stake, and Adam Minto has another 15% stake in the business. Has also come back. He was the previous CEO. It doesn't say it here, but he has also come back in an advisory role to Revolution Beauty. Now, the reason why they've done it that way, in my opinion, is obviously you couldn't have Adam Minto come back as the CEO when he's left after under these circumstances. So the other founder has taken the role as the CEO, and Adam Minto comes in as an advisory. Clearly, he's going to be up there with, you know, a CEO kind of mindset. He'll have as big as a say as a CEO, but obviously it wasn't the right thing to give him the CEO title. So this advisory role is basically joint CEO, in my opinion, with Tom Aylesworth. And yeah, obviously seeing these guys come back is, you know, fantastic, because under yes, they made bad mistakes, but under their previous management, as we showed the slides earlier, this company was growing rapidly with the new partnerships, fantastic products, and also, you know, gross margins very good, profit moving up in the right direction. So yeah, having the founders back who led this company to great success when, you know, previously when it was a £1.80 stock, I think they can get this going up in the right direction, especially with the experience they have in this space. As well as that, they did do a stock placing to raise capital. So this is actually quite a big placing, so just be aware of this. So the placing and subscription shares represents approximately 156% of the existing ordinary shares at the moment. So you are getting diluted 156% 100%. So that is, that's a big share placing that they're doing at the moment. But obviously because they've got to raise capital because of the balance sheet that they're in at the moment, and the company is kind of, getting valued towards bankruptcy levels. It's 11 million market cap. But with that share placing, obviously, if you're new into the business, it's obviously not going to affect you that much. I can't remember when the placing comes into effect. I think it's sometime in September. And it is going to raise around 15 million through the extra 500 million shares that have been offered at the moment. Now, obviously, that 15 million is great because when that 15 million does happen, obviously that's going to go on the balance sheet there. And all of a sudden then, your cash pile is going to go up, and that debt doesn't look too bad if you've got, 15 million of cash in there at the moment. And ultimately, like the losses this year, big chunk of that losses is like one-time charges. So as you can see here, the next year forecasts are actually expecting like a 2 million loss. So that cash that they raise will give them significant cash where they should be okay as long as they get the business back up into profitability in the next 3 or 4 years, which I'd hope they would do under the old management team. Now, like I said, the thing that's attracted me in here is now the valuation, the risk to reward. So right now, as you can see here, even though the revenue's been declining, Revolution Beauty still does 130, well, as 2026 numbers are, 135 million in sales. Now, let's assume that, obviously it's 11 million market cap, let's assume that it's about 40 million market cap after the dilution that's going to happen. So you're still going to be trading at something like a 0.3 times sales, which is incredibly low. And like I said, they're doing 135 million in sales. Just to compare that to someone similar, that another stock that I own, but it's in this space, like in the makeup space, is Warpaint. Now, if you look at Warpaint, they currently do. Let's go on Warpaint's revenue here. So they're going to do 120 million this year in revenue. So Revolution Beauty still does more revenue than Warpaint at the moment. Even after all this collapse in revenue, they still do more than Warpaint. Now, like I said, you look at Warpaint. Warpaint is valued at 258 million market cap. Now, granted, Warpaint is still growing. It's got great profit margins. It's got a great balance sheet. It's paying a dividend. But just to show you the difference there, Warpaint is currently a 258 million market cap. Revolution Beauty, as of today, right now, is 11 million market cap. Now, obviously, when dilution comes in, it's probably going to be more than that. But even so, it's going to be, what? A fifth of Warpaint's market cap. So it shows you they're doing the same sort of sales and it's a fifth of the market cap there. So yeah, pretty incredible. Now this is where it gets really exciting with Revolution Beauty. So Revolution Beauty right now, in my opinion, should be making profit. When you're making that amount of revenue, and I don't know what the current gross margins are on Revolution. So there's still a 38% gross margin, so they have dropped down slightly at the moment, but that should drag up into the 40% range. 40% gross margins on this amount of revenue should be highly profitable. For example, if we just have a pop onto Warpaint right now in this kind of makeup space, outsource this a lot to China. If we look at the previous profit margins of Warpaint right now are currently sitting on a 17% profit margin. So this company here should have decent profit margins like Warpaint. You can see historically Warpaint has always had good gross profit margins with 22%, 27%, 12%. They went down to around about 6% profit margins there, and then 7% up to 17% where they are at right now. Now, just to show you some numbers on Revolution Beauty. So I put 1, 2, 3% revenue over. So if they just get to some slight amount of growth here, and obviously it should be easy now because the comps have come down. But if they get to 1, 2, 3% revenue growth from where they're at right now, and I've put a 3, 5, 7% profit margin in. Now, like I said earlier, if I show you once again Warpaint's profit margins, Warpaint currently sit on a 17, nearly 18% profit margin. So this is assuming that Revolution Beauty only get on the high side to a third of Warpaint's profit margins. Sounds easily achievable, doesn't it, in the next few years? And even on the low side is 3% profit margin. And I've got a 15 times earnings multiple in. We can change that if need be at the moment. But you can see here, 58% on the low side, 173% on the mid side, 298%, let's call it 300%. 300% on the high side. This is on a 40 million market cap, assuming it's roughly about there after the share dilution. So just be in mind that this stock is going to move a ton by then. Normally you do get a bit of a sell-off after the share offering as well. So that's a bit of guesswork going on. So just bear that in mind if you are looking at the numbers. But you can see here, decent upside, especially on that high side, 300% upside on the 7% profit margin. Obviously, that would be really good. Now, like I said, when you look at Warpaint are getting to a 17-18% profit margin. If we saw Revolution Beauty able to grab up to a 10% profit margin, you're up to a 460% upside. If they're able to grab up to a 14% profit margin, 700%, well, nearly 700%, 697% upside. If they're able to get exactly where Warpaint are, which are 18% profit margins, you're up to a 925% upside from where they're currently at right now. Obviously that's, when you're starting to get the 10x is obviously, really good to see there. Now, I don't think they're going to get to an 18% profit margin. That's why I'm assuming something like somewhere between a 3-5-7% revenue growth and obviously profit margins, and obviously that's still decent upside. And like I said, I factored no growth in. So ultimately, let's say that they are able to get to some form of growth where, let's say, like 4% growth a year. Let's say they get to a 6% growth a year. On the high side, let's say they do get to an 8% growth a year. And then all of a sudden, then you're nearly to the 382% upside. And like I said, let's say they can get to, 10% profit margins. You get nearly a 6x there. If they're able to get up to something like a 12% profit margin, 726% upside there. So I look at Revolution Beauty and I don't even take in the fact of like growth. Like, I think they should grow. Because after the tough comps, it should be easy for them to grow. There should be all the partnerships out there for them to carry on doing after they get the new products in, get back in with a lot of the makeup influencers that are out there. They should be able to grow at decent rates, but I'm not even assuming growth. I'm just assuming right now that they come in, they get to somewhere even a third or half of Warpaint's profit margins, which they should be able to do is with the makeup space. You get 45% gross margins. You outsource a ton of it to China. You don't have many employees. I mean, what's at the moment? Revolution Beauty at the moment, it's got 318 employees. So you haven't got many overheads here. Revolution should easily be able to pull up to high single-digit profit margins within like a year or two. That's not even assuming growth. That should be basic. That should be the number one job. And we do okay. Never mind if we actually start pushing on from there. And who's best to do it? They're probably the people that got it into a place where this was a £1.80 stock. So let's see if they're able to turn it around here at the moment. So yeah, like I said, there's normally I come to you guys and say, look at the profit growth, revenue growth, balance sheet, all those things. We don't have it with this. It's literally this investment is based on the founders that used to run this company quite well have come back into the business, and it shouldn't be hard for them to achieve decent profit margins, considering the gross margins they have and the amount of revenue they have. We'll see if they do it. So yeah. That is kind of why I'm kind of adding into this position here. Very small position. But yeah, it's going to be a fun one to watch. It's going to be an entertaining one. But yeah, that is the new UK stock, new UK spec stock I've been buying. So hope you enjoyed it anyway, guys. Thanks for watching. See you in a bit.